We're taking a look at RadarScreen in Tradestation. It's a nice tool, and what I have is a list of futures contracts to use by sector, stock indexes, currencies, interest rates, energies, metals, softs, and grains. And up here the symbol link is on, which you can select which color. I didn't want to do the interval link, but the symbol link you can select, say, the green symbol link in this window, in this window, the matrix in the chart. And whenever I click on E-mini S&P, it goes these two windows go to E-mini S&P. If I go to E-mini Russell, these windows switch to E-mini Russell. If I want to look at the euro, it switches to the euro. And the reason I have this is to do a quick scan of the futures markets. Also, one of the key things you want to take a look at when you're looking at a market to trade is the daily dollar range here at the bottom. I created this simple indicator. You can see the magnitude of the daily dollar range. This is in dollars. 1409 is the current average daily dollar range of the last 12 days of the full session at EC contract. It's been decreasing, and so things to look at are the magnitude of the range and the direction of the range to trade. And so when a market has a decreasing range and this magnitude is low, it could be a good countertrend market. If the range is increasing and the magnitude is high, it could be a good trending market. And so what I like to look at is markets that have over $1,000 average daily range. And so you see that in the euro currency. You don't see that in the E-mini S&P right now. An SR countertrend has been doing really well, and this is more of a countertrend market because the range is decreasing, and we're less than $1,000. Taking a look at crude oil. Crude oil can be it has a decreasing range, but the magnitude is very high. You can see it's got some very high historical values. Gold is very high, but it's also decreasing. Overall, most markets are decreasing right now. Bonds, you can see that it's been decreasing, but it's got over 1,000. Over here, the reason I have this matrix window is to look at the market depth, to see the liquidity. Take a look at RBOB natural gas, or what is this? RBOB Natural Harbor Blend Stock. I don't trade it much. I'm just looking at it. See, it's very thinly traded over here. The bids and the offers are very small and farther apart, even though the range is very high. Another one that you can take a look at is platinum. Platinum, I don't ever trade platinum. It's very thin, even though the dollar ranges can be high. Coffee's pretty thin. There's no gaps, but these are small. You could trade this. The daily range is decreasing. Most markets, the daily ranges are decreasing. Soybeans has over 1,000, but its range is decreasing, and so as traders, we like increases in ranges. It can help us with strategies like EVP2. Here's the EVP2 strategy. So EVP2 is one of the things we like to trade our markets with big ranges, and so I've talked about this before. EVP2 works well on markets that have good ranges, and so markets that have good ranges, things like gold and crude oils tend to be there a lot. Euro currency is there. Usually these are trades from yesterday. Got a nice short there, a nice short on natural gas, a nice short on soybeans. But then, these markets could fall out of favor. Anything could happen. They could become very tight ranged markets. And so you may not want to trade these in the future on a strategy like EVP2 if the range falls, or if one of these other markets increases in range. In a market that's not typically popular, has volume, becomes more range in it, then you could trade that market in a strategy like EVP2. And we have strategies like SR countertrend, and you see the E-mini S&P. Here it is, daily dollar ranges decreasing. SR countertrend has done well lately, and so if a market becomes more like the E-mini S&P, it could be traded countertrend with something like SR countertrend. And if a market becomes more with more trend to it, more average daily dollar range over 1,000, then you want to take a look at how well could EVP2, a strategy like EVP2 do. So Those are all potential things to think about. It's something I will work on programming this in and looking at the average daily dollar ranges, filtering trades based on average daily dollar ranges. And the average daily dollar range is simple. I'm gonna include this RadarScreen workspace, so you can download that as well as this indicator. So when you download, you can insert the indicator and get this workspace, and you can have this information at your fingertips to scan these markets and take a look at the volumes and the market depth. RadarScreen is, if you make more than 20 trades a month in futures, it's free. Otherwise, it's like $59.95. So if you're an active trader, it shouldn't be a problem. But it's a great tool to have, great way to scan the markets and get initial ideas for strategies, not only for just the dollar range of the day, but other indicators that you are interested in, to scan all the markets, compare all the markets, and think about how all these markets trade, and then to have a greater understanding of how your market, how your strategy could work based on all the markets that you could consider trading.